Hello, everybody. How is everybody going? How are you doing? We're about to start. If you want to leave in the chat where you're from and from where you're watching us, we're so happy to have you all here. First of all, I wanted to let you know that this is a recording. I mean, I'm not a recording, but Steve recorded this webinar, so he's not going to be live today. He recorded this presentation for me to share it with you. So in case you have any questions, I'm going to share his contact information in the chat so you're able to contact him afterwards. But you will have all the information needed in this webinar. Welcome, we are Real Estate IQ. We are happy to have you here today, so let's get started. We have 12,000 plus registered attendees. We have more than 500 webinars hosted and more than 100 keynote speakers. And who we are a lead generation software and solutions company focused on helping real estate investors kickstart their businesses. We strive to become the platform and resource to help them achieve their real estate dream. I'm gonna share a poll with you so we get to know you better. And we know if you would like to have a free demonstration of our tools, and also know if you would like a one-on-one consultation of our services, and if you're already an existing Real Estate IQ subscriber. What do? We provide real estate solutions to make deals come true. We offer a suite of lead generation automation tools, educational content, and additional services to the real estate industry to help entrepreneurs kickstart and grow their business. So this is the streamline of our solutions. We offer you off-market leads, find the freshest data mined straight from the card houses daily on our data portal. We also offer you the side of events, great education led by experts and training on our solutions. We also offer you skip tracing, get homeowners contact information effortlessly, CRM, perfect to track listings and marketing campaigns, virtual assistants, virtual support for administrative tasks, customer service, and more. Fire, personalized financial checkups and consultancy. EVA, rent real estate comes in seconds with our renewed evaluation CMA. CLM, we now provide custom off-market data mining all over 50 states. Last but not least, the membership. Tailored plans to meet every investor's needs. So this is the deal of the day. The pre-foreclosure, you can scan the QR code because today we bring you this golden lead to grow your business. You can contact us to learn more. You can sign up to get full address and submit your deals to advertise. So don't miss this opportunity. You can also join us in our newsletter, stay informed with Real Estate IQ's weekly newsletter, get market insights, data updates, and even highlights, all you need for successful real estate investments. By scanning the QR code, you can join us in our newsletter so you don't miss any of our weekly webinars and in-person events. So these are our social media accounts where you can follow us as well. We are in Instagram, Facebook, YouTube, and LinkedIn, and you can use the QR codes that appear below of each icon so you can join us in our community. And also we have the Academy, Learning Made Easy. Here you can find our best webinars and short courses so you can stream it at any time and from wherever you are based. Log in to stream. And we have Steve Liang with us today talking about building hidden gems, mastering the art of finding great real estate deals. I'm gonna tell you a little bit about him so you can have more information about who he is. Wait a minute, I want to stop sharing the presentation. Actually, he's gonna tell you a little bit about him. So I'm gonna let you enjoy this webinar. If you have any questions, I'm also gonna share in the chat his contact information So you can reach him whenever you want and ask him all the concerns that you may have. I hope you enjoyed. Let me know if you can hear
Welcome,
properly.
everybody, and so glad to see so many people joining us for this amazing class. This class is about how to find great real estate deals. Okay. And I think all of us, the fact that we're all here, we know that real estate investment can be a very lucrative business. And this is because we can buy at a good price and sell high. There's a lot of opportunity for appreciation, which we're going to talk about a little bit here. But just in the last 30 days, we found a lot of opportunities. We found over 14,000 off-market motivated sellers. And why do we care about off-market motivated sellers? It's because when we are, well, real estate, as lucrative as it is, it's not a liquid asset. And so in order for us to find opportunities where we can buy at a price that's below market value, we typically want to find those that are very, very motivated to sell. And because they need to sell really fast, they are willing to drop the price and sell it at a lower price so that they can cash out. So we monitor these off-market motivated seller opportunities. There are over 14,000 that we found in the states that we cover. Lots and lots of opportunities. And if we just look at the pre-foreclosure leads, and real estate investors are very, very interested in the pre-foreclosure leads, mainly because the pre-foreclosures are the ones that are the most likely to convert into deals. When they don't sell, they're going to lose their house in the upcoming auction. And so they're in a situation where they really, really have to sell, whether they choose to admit it or not. And here in the area that we cover, we found 8,900 new leads every single month. So there are a lot of opportunities there, right? Remember that every lead, if it turns into a deal, we're talking about potentially of course, it depends on how much equity the property has. But typically, we would be looking at, $50 to $100,000 worth of profits. Now we're going to dive into, how we calculate profits and how we can make money off of these deals because every deal is different. So we're going to dive into the actual details to talk about it. But kind of my point here is just to share with everybody that there are tons and tons of these opportunities, and each one is very lucrative in and of itself. So naturally, the question is, how can we find these deals and how do we make money off of these deals? My promise to you today is that at the end of this webinar, you understand how to find great real estate deals and how to make money off of it. This course, from a experience standpoint, it's really good for you if you are a new investor and you're looking for knowledge to get started. Or if you're an experienced investor and you're looking to refresh your knowledge on finding deals, really because there are so many types of motivated sellers, and there are folks that can do really well in real estate investments by just focusing on one type of motivated seller. And in this class, we're going to cover all the big types of motivated sellers. So you may learn something you don't know. From a business model standpoint, this course is for those who are interested in wholesaling, doing fix and flip, which means you buy it and then you fix it up and you sell it at a higher price. Or you want to buy and hold the property, but you acquire at a big discount, right? Big number, big below market value price. As always, a reminder, you'll get the most out of it if you can, kind of focus on the content. So turn off your distractions and your notifications and use the chat to introduce yourself. The more engaged you are on the chat and in this class, you will get more out of it. For example, I highly encourage everyone to share your contact information using the chat because you never know, uh, who you're gonna meet and make a deal with. And actually, to elaborate that a little more, I highly encourage you to use the chat to introduce yourself, right? And share your contact information. Use the save chat function to download everybody's contact information and make an effort to connect in person uh, after this class. That's very, very valuable. Disclaimer, the content here is for educational purposes only. Always do your due diligence before making investment transactions and investment decisions. We don't offer investment advice, financial or legal advice. So just a quick word about me. I'm an executive partner of Real Estate IQ. And over the years, I have acquired some expertise in marketing and management and automation and data. My background is in more on the science, the analytics side. I have a science and engineering background, and I was always interested in real estate because there's a lot of appreciation power in real estate. Ever since a very young age, I was taught that real estate is the way to build wealth and get rich. Maybe more like really building wealth because we say there's a difference between being rich and being wealthy, right? And so now, but when I really start getting into real estate, I realized that it was difficult to find the knowledge that we need to be successful in real estate investing. It's a pretty niche knowledge, and it's not like you can find it everywhere. It's hard to get good data and technology to help with the acquisition or the selling, even for real estate investments. And on top of that, it was hard to find mentors and fellow entrepreneurs so we can share our experience and learn from our mentors. And that's why we decided to offer the following features and advantages, benefits for Real Estate IQ. We give you access to webinars and classes. We will teach you about deal finding and the data for deal finding. And with Real Estate IQ, we really are bringing you a support system for you as an entrepreneur to find success in your deal finding journey. So when you get a chance, take a look at our Real Estate IQ community and our membership. There's a lot of benefits and opportunity for you to really get in this game. Now, without further ado, I want to start getting into the main content for this class, which is to find great investment deals. And within this class, we're going to have two main segments. The first segment is on how to make money, what we call business models. So we're going to talk about the three main business models people use to make money in real estate. There are also more advanced business models, which we'll cover in another class. And then we'll also talk about how we can find the great deals. So, one is how to make money and then how to find the great deals in order for us to make money off of these deals. So first thing first, okay, so let's talk about the business models. We're going to cover the three major business models today. One is called buy and hold, fix and flip, and wholesale. So we're going to talk about what it is and also how you can make money. So buy and hold means you're buying a property, you're going to hold it and rent it out, basically. So how we can make money is we want to look at the 1% rule of thumb. So this is the first rule of thumb for everyone to learn. So for buy and hold, we want to follow the 1% rule of thumb, which means that whatever offer price I choose to acquire a property, it should be based on the rent that I will generate. And what that 1% means is that I want my rent to be 1% of how much I put in the property. So For example, to kind of back this out and figure out what our offer would need to be, let's say that we do a market analysis and we found that our estimated rent for the area is about $2,500 a month. Based on that rule of thumb of 1%, I would reverse that and multiply by 100. It means that I have $250,000 to work off of. And if we realize that after we walk through the house, that the repair budget, how much it would cost to fix up the house would be $20,000, then it would mean that at most I can offer is $230,000. And what that is, to just kind of complete the math, is that I would acquire at 230,000. I would repair the property. So the total I put in is $250,000. And then 1% of that is 2,500. And the reason we use that 1% rule of thumb is that we know for sure that by putting in this money and by acquiring 1% in rent every single month, it would be able to cover all the cost of acquiring this property, of maintaining this property, excuse me. And then will also yield a monthly cash flow from holding this property. So let me give you an example of what the monthly cash flow would look like off of this $2,500 per month rent. So this would be an example. So let's say in this example, the mortgage is $1,200 a month. We have to pay property taxes, which is $275 a month. We have to pay insurance and HOA maintenance, and subtracting everything from that $2,500 per month, it would yield a monthly cash flow of $575 per month. So that's not bad for owning one property at $250,000. Okay, some people may even go in and calculate a cash on cash return and the different kind of returns on the number to evaluate whether it's a good deal or not. We're not going to go over that very much in detail today. Although I would highly encourage you to study that and learn, download a calculator so you can start comparing deal by deal. Now, that said, when we see a number like this, we pretty much know that it's a good deal. And so if we have multiple deals that we can choose from, it would really make sense to kind of calculate and see which deal looks the best on paper. Although I would also really kind of emphasize that, a lot of times when we get a deal and we know it's a deal, we don't need to find the best deal. We just want to make sure it's a deal, because every deal is every good deal, if we acquire it right, it's a really, really good wealth building opportunity for us. So with that said, that brings us to our next slide. Buy and hold is a great wealth generator. And there are several key advantages of buying and holding the property. First is cash flow. We already talked about that in our example. There's also appreciation. If we hold a property, it can rise up in value, and it's a really good hedge against inflation. We just experienced some crazy inflation. We're still experiencing some crazy inflation right now. And when we hold cash and inflation happens, well, the cash loses value. However, if we're holding real estate property, or if we're holding an asset that appreciates along with inflation, then we can hedge against inflation. There are two types of appreciation when it comes to real estate. One is called natural appreciation, which means I just need to hold a property and the value of the property just increases over time. The other one is called forced appreciation. And what that means is I'm going to fix up the property and bring the value up on the property. And that's called forced appreciation. There are two ways you can do to increase the value for the property. Number three is tax savings. There are different ways where you can enjoy that tax saving through depreciation of the property, write off the interest and operating expenses. And then finally, you can also pay down the loan and build up your equity. So all of that combined is the kind of overall advantage of the buy and hold. So some folks, maybe they're just looking at cash on cash return or cash flow. Uh, you may also want to start looking at number 2, 3, and 4, appreciation, tax savings, and loan pay down if you really want to have a full picture of what life would be like after you acquire property. One piece of caution here is it's very easy to get into analysis paralysis. Sometimes I find myself doing that, and I'm thinking too much. I'm not taking enough action. So just make sure that execution is a big part of the game, and it's about acquiring the right deal. And it doesn't necessarily mean that we always want the best deal out there. Just a good deal at the right time goes a long way. Okay. So next, we're going to talk about fix and flip. So fix and flip, there's another rule of thumb, and it's called the 70% rule. And what that means is that I would want to acquire the property at 70% of the market value. Okay, and that's a general rule of thumb. Some people go outside of that. Some people acquire it higher during hot market because they think that it will give them more of a leg up in winning the property. And if they can exit, if they can sell the property soon enough, they can still make money. Some people like a steeper discount, instead of acquiring at 70%, maybe they want to acquire at 60%, 50%. But the basic calculation is this. So the first thing that we want to understand is what's called an after repair value, which means, let's say I got this house and it may not be, a retail property, which means it's not like ready to sell. There's, a lot of work that needs to go into the house to fix it up. But we don't really care about that necessarily. We care about what it would be after we fix it up. So that's what after repair value means. It means that it's the market value of a similar property that is ready for the general market, general consumer market. So we want to figure out what the after repair value is. And we usually figure that out by figuring out what the market value by running a comparable analysis. So let's say we figure out the after repair value is $500,000, and we use the 70% rule of thumb to do this calculation. So 70% of 500K is $350,000. And then the logic or the math is the same. We subtract the repair budget, and let's say it's $70,000. Then our distress offer, the highest we can offer in this scenario, is $280,000. So to flip it the other way, I acquire at 280,000. I put the money into fixing up the house, and now I put in a total of $350,000 in there. And then the after repair value just determines what my exit price is. When I sell it, I'm gonna sell it at 500K, so I can make the margin between 500 and 350. Okay. Now that's the 30%, right? So 70% is everything that goes into the property, and as a in this business model, that 30% is the margin. But that's not all that we're gonna earn. Okay, so there's a couple of pieces we gotta keep in mind here. So where is the other 30%? The other 30% can go to stuff like closing cost, holding and maintenance costs. Remember, we're fixing up the house, and every day, there is electricity, there's taxes to be paid, and so on and so forth. And if we also obtain financing in acquiring and fixing up the property, we also need to account for that financial cost. But because we are still in a pretty good, because we acquire at a good price, we can still profit at, in this example, $16,000, which is a really good number, right? And this is exactly why we want to acquire the property at a, say 70%, because it allows us a lot of the margin to pay for all these additional costs. So that's fix and flip. All right, next. is called wholesale. So wholesale is a very popular business model, especially for folks that say they're really good at marketing or acquiring the property. They're extremely good at acquiring the distressed property, and then they sell it to other investors. So they either sell it to a buy and hold investor, or they can sell it to an investor looking into fix and flip. And so they're kind of like the middleman, although they, not necessarily because they did add value by acquiring that property. And then the buy and hold and fix property that you got to take care of can be a
Okay, everybody. So feel free to reach Steve. Um, I'm here, Martin, in case you want to ask me anything. Um, it was a pre-recorded webinar. Yes, I see. Um, we are gonna send you the recording of this. Yes, this is gonna be available for you later. So we're gonna send you the presentation through email. So stay tuned and check your inbox so you can have the presentation. Thank you again for being here, and feel free to reach Steve in case you have any questions, such as the one you asked before about vacant land and anything else related to this topic. You can reach Steve. I will share the email address again so you can reach him in case you have any concerns about this topic. And let me know once you receive the presentation if you still have any problems with the sound. I don't know why this happened. I could hear it properly, but I don't know if it was a problem with Zoom or maybe with the presentation. Um, I'll make sure you can receive it properly. In case you cannot hear properly, just let me know. Thank you again, everybody, for attending, and I'm sorry for that issue. We expect you in future webinars. Thank you again, everybody. Have a wonderful day.